Hello, welcome to this program for all students and entrepreneurs. Introduction to Accounting Lesson 1. My name is Nathan. What is accounting? It is the orderly and systematic recording of business transactions relating to a certain period, which could be days, weeks, months, or even years. It involves determining the nature of the transaction, and that is what we call identifying. By identifying, we need to know whether it is cash, or debt, or an expense. Then we need to determine the value of transactions by measuring how much is involved, is it a fair amount or not. Recording of transactions in the accounting period. And what do we mean here? If an item was bought 2 days ago and the period under consideration started today, then such an item should be recorded in the period to which it relates. Finally, reporting the financial results, and that is what we call reporting. The question here is the amount reported in such a way that they are understandable by the user in the corresponding periods? That is very, very important. Please remember to subscribe, give a thumbs up to the video, and make your comments known to us for a better level of service. What is the purpose of accounting? It is intended to provide the users of an entity with financial information regarding its economic activities. This information is summarized in form of financial statements. What do we mean by information regarding economic activities? This information enables them to do a financial analysis and make correct financial decisions. This information, which is summarized in the financial statements, relates to a business which is completely separate from its owners. It must be assumed that the capital invested has to be paid back to the investors at a later stage. In other words, the business is a separate entity. And therefore, when he puts in money, he's expecting that money to come back to him. When the shareholders buy shares in a company, they're expecting that money to come back in form of dividend and also the initial capital that was invested. Users of accounting information. We have management. Management uses the information to ensure that the resources of the entity are properly utilized. For instance, are the transactions conducted in an efficient and effective manner? Investors, they use the information to make investment decisions. They can invest more, they can disinvest, they can decide to maintain the status quo through comparison with previous periods, with similar businesses, and also considering the economic terrain. The creditors need information in order to determine whether the entity will be able to pay their debts. For instance, if the information shows that the bank balance is very low or negative, then the creditors will start worrying and stop supplying their goods and services. Sometimes, when they're not paid in time, they also cut off supplies. Owners, they use the information to ascertain if the organization's funds are being effectively and efficiently utilized. Customers need assurance if the entity will be able to deliver goods and or services. For instance, for the continuity of business, many organizations prefer to have long-term agreements with the suppliers. Customers can use the accounting information to screen their supplier. Employees need to ascertain if their jobs are secure regarding remuneration and opportunities for career growth. For instance, many trade unions use the accounting information to bargain for better remuneration and welfare. The community wants to know whether the entity will be able to provide or deliver on its social demands, such as soccer sponsorships, infrastructure development, and so on. The government wants to know whether the entity will be able to pay taxes and levies. Those are the users of the accounting information, and why do they need that accounting information? Financial statements are statements that summarize the entity's state of affairs. If it is for a specific period, we regard it as financial performance. For instance, there must be cutoffs, usually date from and date to, or as at a particular end date, which is the financial position. That is the date 2. Let's take an example of the financial year ending 31st December 2022. The financial statements will be indicating that they are ending on the 31st of December 2022. Also, the financial statements summarize the movement of cash transactions during the specified period, similar to the financial performance period. If the financial performance period is from 1st of January 2022 to 31st of December 2022, then the movement of cash during that period is what to report in our financial statements, which is normally called the cash flow statement. We are going to look at that at a later stage. Elements of financial statements. Assets are what the entity owns. For instance, property, equipment, fixtures, debtors, inventory, cash. All those are assets. Then we have liabilities, which include loans, creditors, tax payable as examples. Then we also have equity, which is now the interest of the owner of the entity, meaning that the owner's capital, less drawings, and also profits, which is income less expenses. Then we have income, which is sales or any other income, which would be sale of other items, it would be a donation, it could be a grant, but that is all income. Then expenses, which are purchases of the stock, electricity, rent, and salaries. These are some of the examples. I would like us to look at this example to classify the following using the letters assets, liabilities, income, and expenses, whereby assets are denoted by A, liabilities, denoted by L, income by I, expense by E. We have the bank. Of course, this should be the bank balance, the amount that is in the bank. This is money that the business owns, so it is a current asset. Whereas the bank overdraft is a liability because we need to pay that money at a later stage. Buildings, those are assets because the money that was used as capital, part of it was used to buy buildings. Those are assets of the business. Capital is normally regarded as a separate issue, but because we have to pay it back, we have to regard it as a liability in this instance. Creditors, trade or other payables, those are liabilities. Debtors, who happen to be trade receivables, because we expect money from them, they are assets. Drawings are part of capital, so in this case, we cannot really specify where they belong. Equipment, that is an asset because we have bought it, it belongs to the business, and therefore it's an asset of the business. Interest paid, that is expense because it's money that is going out of the business. Interest received is income. Inventory is an asset, what the business owns. An investment which is made by a company, like for instance, if the company we are looking at invests somewhere else, that money is an asset of a long-term nature. Profit is part of capital. Rates and taxes, those are expenses. Rent paid, expenses. Repairs, expenses. Salaries and wages, expenses. Sales revenue, income. Services rendered, because you're expecting money, it is income. Stationery, expense. Transport costs, expenses. Vehicles, asset. Water and electricity, expenses. Using the information from above, please look at this practice question in your free time before we go to the next lesson, because you need to start practicing. Accounting is a practical subject. The more you practice, the more you understand, the more you become competent. So this question, we are going to look at the answer when we go to the next lesson. And the next lesson is going to be starting with the answer to that question. And then we shall look at more definitions of the various classifications, the underlying assumptions of financial accounting, qualitative characteristics of financial accounting, your concepts, and other concepts. In conclusion, accounting is the orderly and systematic recording of business transactions relating to a certain period. Accounting records provide users of an entity with financial information regarding its economic activities. This information is summarized in the form of financial statements. The accounting information is needed by users for specific reasons. Financial statements are records that summarize the state of affairs for a specific period and or as at a particular end date, and also movement of cash transactions during a specific period. The elements of the statements are assets, liabilities, income, equity, and expenses. Please remember to subscribe, give the video a like, and make your comments known to us for a better level of service in whatever we are doing. God bless you in all your efforts. Thank you.